Good morning, everybody. Just going to play some music in the background while we wait. It's Friday, the 24th of February. So we're going to wait a few minutes for some watchers to show up, and then we'll start the stream. Good morning to those that are just showing up. Waiting a few minutes before we start. So for those of you that are watching, after the stream was done, go ahead and you can skip forward until the music stops, and that's when we'll start. All right, I'm going to start in about 60 seconds. All right. Well, good morning to those that are joining the stream today. And so today we're going to go over stop loss and take profit levels. Those are the things that we'll talk about a lot today. And we'll also touch on high risk trading and why it can be good and bad. When I say high risk trading, I mean high profit per month, potentially, which in most cases means pretty substantial losses too, or the potential for that. So I didn't write out a lesson schedule for today. I'll do that. I'll do that for the next stream. I just kind of forgot to do that. But I don't think it's necessary. Today we're going to go over, so the first thing that we'll go over is my current trades that I'm in, or that we took that we've taken since Monday, so the last few days. And so I'll go over the profit that was made during that time, profit for the week, and why I took the positions I did and how they turned out. Okay, so we'll go ahead and start with since you guys know that I'm trading two pairs now. I'm trading the pound CAD and the euro pound. Now, the positions that I took on the pound CAD this week since Monday. I think Monday. What day was Monday? Was it the 20th? Yeah. So these positions weren't closed out yet. Here. So these closed out for a profit here. These three trades. So 1, 2, 3. Closed out here for a profit of 50 pips. All right, the next trades and this one was executed on the 21st, so on Tuesday. This one was a really nice entry. As you can see, the inside candle set up here, then the entry on the candle just after, the shoot up, in the profit right here in this area. So we had a nice profit. It's kind of hard to see. I'm going to see if I can close out. There we go. So you can see the candles better now, or where the actual exit was. So the entry, exit, 50 pips. Okay, so moving on. And I'll talk about the positions, why they were entered in just a second. I'm just showing you the entry points and what profit was made on this particular pair. So first entry here on the short side, second entry on the short side because it didn't quite move down from there. Still didn't quite move down enough. In the third entry, that's when the market did move, or the pair did move, and we ended up taking profit on all positions here. Okay, and then we haven't had anything since. So those trades were closed on the 22nd. So I haven't had any trades for the last day or so, for the last 24 hours, just over, which is fine. There hasn't been any really good trading opportunities, at least on this pair. Now, the profit in trades that happened on the euro pound. Now the euro pound trades a little bit less. Doesn't trade as much or I don't take as many positions on the euro pound as I do on the pound CAD. And as you can see here, these were taken on the 21st, so on Tuesday. And you can see what the first trades, second and third were entered, and then where the profit was taken. Those were that was 50 pips profit overall taken from these three positions. Okay. So let's go over the entries on these trades so you can better understand why they were taken and why they really hit profit. Okay. So hopefully you can listen up, and hopefully this makes sense. Please ask questions either in the live chat on YouTube, or you can also I can answer questions for you if you're seeing this video on forexfactory.com. Okay. So first entry was taken after the push up, inside candle setup here, and we had an entry right after that. So the inside candle setup happened after a push up. So we had a push, break of the last swing high, inside candle, setup, first entry. Second entry, so trade 2, was entered 20 pips after. My writing's getting a little bit jumbled up here. So trade 1, trade 2, and trade 3. These were all 20 pips away from each other. And it was on a grid. And the reason why I have it on a grid is so I can capture all the available the pullback when that happens. The thing is that the 20 pip grid is actually pretty tight, but I do that because once price action gives us this type of setup, that means that there is potential for price to slow down on its push in that intended direction, or that direction that it's been going in for the past while. So since down here, right? And there's potential for that to slow down. So that's why I enter on a grid, because my first entry may not be the best one. And so that's why I'm looking for other opportunities. As you can see, we had some pin candle, we had a hammer candle here, we had some candles up here that had some pretty good wicks as well, and potentially another hammer here. And then I eventually did have its pullback, and I was able to capture that. I was able to capture that in that small bracket of time, so it's only about 10 hours or so. Okay, and that was 50 pips. So we came out with 50 pips profit from these 3 trades. There wasn't much drawdown at all, not even a percent, way less than the percent. Okay, so the next entry was quite good. This was, hold on. All right, so we're looking for that larger pullback. So this small pullback happened here. We went back up, made a new swing level, and then we came back down, broke this last small level, and that's when I had my EA enter another position. on this time on the long side. Okay, and you can see the setup that I'm looking for. Again, inside candle. So the bearish candle that matched or just barely broke the previous low, inside candle, and then an entry. Now the entry candle went down a little bit, but it wasn't much. Drawdown was actually pretty small. I believe it was just about 20 pips, and then it shot back up, and it was a very clean trade after that. And we actually had our profit taken here for 50 pips. So a good setup. Not as much pullback as I'd like on this trade. It was still decent setup considering that these swing levels here and the support at this level. And so it was decent, and I'm glad that that my robot did take that. If I were trading personally, I might have waited a little bit longer and potentially may have missed this setup. Okay. All right. So trade or positions number 3. Now I'm gonna have to change the chart style of this a bit so you can actually see these trades a bit better. Again, the inside candle setup here. You might need the candles so you can see. Okay, so the inside candle set up on this here. So you see the wick candle in there, and then you see followed by a bearish inside candle. So the bearish inside candle did not break the low of the previous bullish candle. It didn't break the high. So it did move down a bit, but not as much as we needed it to. We needed 50 pips on this trade, and how much did it move? Oh, well, just about 17. Okay, unfortunate. And it shot back up and made a new high at that point. So it broke this level, made a new high. All right, but like I was saying before, that once price starts showing this kind of action, it's likely that the price will continue to start slowing as you saw. It creeped up. It did break the level. Then we had another candle with a pretty big wick, not quite a hammer. But then it did push back down from there. It started creeping up again, and then it fell. And then it fell in a much bigger way after that. So again, price started slowing, and then the pullback happened. All right, so to see that, I change so you can see the entries. Entries 1, 2, and 3, all closed out at the same time. And they're all 20 pips away from each other again. So this is a pretty decent setup. I mean, we haven't had a lot of trades. We've had 3 here, we had 1, we had 3 here, and then we got what we wanted. But the thing that's nice about that 20 pips grid that I go on, 20 pips and then 20 pips, is look, right at the peak, my third entry happened, and I was able to capture a good amount of pips on that third entry because I knew that price would start to slow down at this point because of the original inside candle setup. Okay, so we haven't had any trades on the pari since then, but we do have a trade now on the euro pound. So I'm going to go over that now. Actually, before I go over that, I'm going to show you the setup that happened previously. Now, this one's pretty easy to see. And you don't even need this indicator, guys. This is what my EA uses, this RMI indicator. And it helps for the EA to find overbought, oversold conditions, kind of like the stochastic or the RSI or even the CCI indicator. And you can see that the inside candle setup again here. This one is really easy to tell because of the bearish candle, the inside candle here, right after the bullish inside candle. And then there was for me, the potential for that to shoot back up, but you can see that it just did not happen. There was almost no bounce at that point, which doesn't happen too often. There's usually some kind of bounce at that point, but this one went straight back down. Again, 20 pips from the first entry to second entry, and this one didn't have much of a bounce either. And then the third entry down here, another 20 pips away, that one actually did shoot up. Now the reason why this was a good place, now it was random because the EA just entered 20 pips on the grid, but it happened to be at a good price level at 84, near the 84 whole number, and that's a lot of times a good place for volatility. And in this case, it was a good place for volatility on the bounce, on the pullback. As you can see, that's what happened. It bounced in a pretty big way at that point, and we got more than the pips that we wanted. And we ended up taking a total again of 50 pips profit from amongst these three trades. All right, so current trade that we're in. Now this trade's going pretty well, and we are currently looking for 50 pips, and it's moved about 40. So we still have a little ways to go. As you can see, we're not in huge profit. It's only about $13. I think once this trade closes out, it will be about 17 to $20 profit on this 6,500 over $6,500 account. Okay, so this will close out. I won't close it out early. I'll let the EA play it out. It's looking really good, and if you look at the price action, or just what the way that the price looks, you see the push down. You see that it reversed here, and you see that it had that pullback that I'm talking about after the push down. So pullback, and then we had the push back down. This would be with the trend if you're looking at the larger picture. But the thing is that it did bounce at this level, which is a new higher low than previously. So we could be seeing a trend change here, because if this decides that it's going to continue up and then either retest this same level or even breaks that level, then especially if it breaks it and it continues to go up, that could mean a change in trend direction, and this could go higher at that point. Okay, so that's what we're looking at right now, and that's how my profit was for the past week, or since the last stream I had. So what does that look like on paper, or well, paper or online on my tracking, my FX book, or tracker, not tracking. So this is the current stats that I'm looking at. As you can see, that we're on a an 0.82% profit this week. So we're having a really good week. With it's only equals out to be $53. That's not bad. I'll take it. But the biggest thing is the percent gain. That's what I'm looking at. And 8.82% in less than 1 week is really quite good. And this is my equity and balance curve, which is really solid. The drawdown isn't too crazy. Monthly profit average is 4.57%. So far this month, we're at just over 3%. You see the current trade that I'm in right now, and waiting to close out. All right, so the news this week. Excuse me. So news this week, we just had the CAD CPI, which was way better than typical, and CPIs don't usually move pairs too much unless they're drastically different, or better or worse than what the predicted number would be. In this case, it was a lot better, and so it did cause the CAD, at least on my pair, on the pound CAD, to push down in a pretty big way, as you see here. Right there. Okay, so I know people are here to to learn how to trade profitably, and if it's not just profitably in general, they're looking at either trading my strategy or trading something like it, or getting some ideas so they can profit themselves. Now, I'm going to start getting into some things here that may be I don't think it will make anybody mad, but some people may be skeptical of the things I'm going to say, and they also may not like them because it kind of breaks their idea, at least in their heads, of what Forex is about, and what can literally be achieved in trading. And it's something that it's one of the reasons why I do this stream, is to try to change people's minds on their reality of trading in general, and what's realistic. I like to try to change that their views so it's more realistic, and because that's one reason why people don't struggle to profit, is because they don't have realistic views of what is attainable or achievable in trading. So that's one thing I'm going to try to touch on today, and it doesn't help with places like Forex Factory. There's a lot of great information on Forex Factory. Don't get me wrong, lots of good information. But there also is a lot of bad stuff too, and that's just because it's a public forum and things like that are going to happen. So if we go into the forums here on Forex Factory and we go into the trading journals, and I touched on this in one of the last streams I had, but you see some of the journals, at least, that are the most popular. And usually it's the ones where traders are doing really well. For example, like HKD seems like a really nice guy, and he's having a really great performance. So as you can see here, I mean 6,925% in since he started about 99 days ago. But this is what we have to go by for an example. I mean, if you scroll down, you see the last messages that were written. You see Mr. 90s, which is the guy, 90s trader. You see some stuff like, "You're the Michael Jordan of retail trading. Happy 200K." The thing is that people are like awestruck by what he's doing. And yeah, I'm not gonna. He seems like a really decent trader, but from history in the last my last 11 years of trading, I see this all the time, guys. I see it all the time. And when is the last time that you've seen a trader actually keep up these numbers? 30% this week, 169% this month. When have you seen that trader keep this up for, say, 6 months to a year? Now he's going on 4 months now. He started trading in November, mid-November. And so he's doing about 4 months, which is pretty damn impressive, I would say. Um, and most of the time, I don't see that happening even that long. I don't see traders able to keep up stats like this for more than 3 months. He's able to do it for 4. Now we'll see if he can continue. But I rarely see it past 6 months, and I don't think I've seen it 12 months. Actually, I don't think I've seen it longer than 6 months. So don't use this as an example, because if you do happen to scroll down, you'll see people saying, uh, "Thanks for teaching us. Congrats on reaching this level." I heard some people saying that I should trade gold more often because maybe there is something more to gold trading, or something that a way to profit is easier with trading gold than it is something else. That's just not necessarily the case, because every pair can be difficult to read at times. It can be up, it can be down. The pair could be ranging. Gold could be ranging, it could be trending. And right now, it's trending in a huge way. So if you just go and we look at gold, you'll see that recently. You see recently that it's been trending in a massive way, especially since pretty much since January, and even before that. If we're looking since really the December 15th, it's been trending in a massive way. And I don't know if that's going to let down or not. And usually when the markets are trending, people are making decent money because most traders are trend traders, and that's just the way it is. And so um, he could be doing very well. HDK could be doing very well, is because gold has been trending very much since he really started trading. Now, if I'm really dissecting, and I'm sorry, 90s trader, if you happen to be watching this, but I think it's important to dissect other people's trading strategies and methodologies, so we can gain a better knowledge of how to approach the market ourselves, and that's exactly what you guys are doing. Um, and you can see that if you go into his trading profile, you'll see that he's a very new trader, at least that he's led us to believe. And he's from Hong Kong, and he has traded since January 2016. All right, so that's a really new trader. Now, I don't want to be prejudiced against new traders, because I've seen traders. For example, I know somebody that's a very good trader that's only been trading for less than 3 years. But I rarely see really good traders that have been trading just in the last year, and I guess that's what he's been doing. Okay. So I hope him all the best, and so far things have been going very well for him, and we'll see if he can continue his trading stats. I think it's very unlikely that he will, But let's give him a shot. All right. So let's go back to more standard trading. All right. So this is a guide that I've touched on in the previous streams. Now, he's made 56% profit, and his account has been going also since November, I believe. It doesn't look like his stats are loading up. Oh, there it goes. Since November, and he's had some pretty good profit. But if you look at his stats, you'll see this. Here, it's been going up. It's a clear stop loss strategy where he has a set stop loss and it may change, but he's struggling the last little bit. The thing is that when our equity moves up and it starts to move down and it breaks our last levels. So his last bottom out was here, and that broke, right? So now he's pushing back down to these levels, and now it's continuing down. But the thing is that happens a lot. I see a lot with traders is that once it starts this downward move, it continues, and they struggle to make back the profit. Why is that the case? Because traders typically will leave their positions in for longer periods of time, hoping that they will make a good percentage or good amount of the loss back. So they're hoping to recover a large portion of that. And the more pips that you shoot for or try to grab, the harder that is. And so that's the mistake that a lot of traders do is they basically change their strategy and not necessarily change their entries or their exits, but change their entries or their stop losses, but they change their profit levels, hoping to get that special move that gives them a large amount of pips. And it's a mistake that a lot of traders make. Okay, is by changing their strategies once they're in the negative. Okay, so let's get back to some trading here so I don't bore you guys. I try to move around a lot and hope that things are beneficial for you because that's what I do here. I talk things out with myself, with potentially with you guys. Hopefully some of you decide that you want to chime in. If you have any questions, I can always answer those as well. Um, and it helps me to dissect and understand the market better as well as hopefully it does for you. So let's get into some trading and show you again what I do and how I approach the market and why my stop losses and take profits are where they are. Because that's where I did want to focus on today, and I think that I'll focus the next few minutes on that. Okay, uh, so on these trades, for example, we're going to use these as an example. So trade 1, 2, and 3. So trade 1 initially has a 50 pip profit. TP. Okay. And if it doesn't get hit, then I enter it on a grid on 20 pips until that 50 pip take profit is hit amongst all the entire basket. Okay, and my EA will continue to do that, and I also do that with my manual trading of the strategy as well. So where's the stop loss? Initially trading this strategy, I didn't have a stop loss, or I did have like kind of a percentage cutoff, if you will. So it was still kind of a stop loss, but it was more variable, and which is a problem in itself because if I have a stop loss in percent that is variable, that means that if motions come in, I might change that stop loss, and it could potentially turn into something bad. And I could lose a lot more of the account than I set out to. So 50 pip take profit on my trades, and I have a 500 pip stop loss. Now, why the 500 pip stop loss? Because initially a lot of you are probably going to be saying, wait, so your take profit is only 10% of your stop loss? That means basically I have to win 50 pips 10 times in order to, basically break even. That's not necessarily how the stats work. Is if you look into my history, you'll see that summary. You see that not That's 60. I've only won 65% of my trades, right? Okay, so don't be confused by these stats. 65% of the euro pound trades and 75% of the pound CAD. Now the reason why is because I'm closing my trades in a basket, as you can see here. So these two trades are in profit, 1 and 2, and then sorry, excuse me. Trade 1 is in loss, and then trade 2 is in profit, and then trade 3 is in profit. So that's why I'm getting a a closeout of profit in percent that way. So the majority of my trades are still closing out in profit, but since some trades are in loss, but the other trades are more in profit, I'm still coming out with only a 65% win rate. But I'm still winning in the long term, and I'm still not closing out a lot of 500 pip losses. Now, if I can show you what that looks like, I probably should have pulled up a test. Let me see if this one works. So this test that you see here is is on the pound CAD, and it's a 300 pip stop loss. Okay, so 300 pip stop loss. What does that look like? Okay, so you can see here. This is a decent example. Now with the 500 pip, we won't have as many trades close out in loss. But what happens is the top orders. So order number 1, right, is up here. That's the first trade to close out. As you can see here, it closed out here, and that was a stop loss of 300 pips. Now this is just a test that I'm doing, and so I'm testing different strategies to see if the 500 stop loss level is good enough. Is it something that's attainable? Is it something that's workable? And so order 1 closes out first at 500 pips, order 2, 500 pips, order 3, order 4, or 5 and 5, until eventually the market reverses. Now, the thing is, since we added so many positions on the way down, that eventually when the market does bounce back up or have its pullback, we still come out with some trades that close out in profit. Yeah, we did end up losing 3, 6, 9, something like 2,500 pips or more, maybe 3,000, but we did end up gaining 50 at the end. Unfortunately, that is not a profitable basket, and that's just something that's part of trading. And what that looks like is a equity curve or a loss like this. Oh, gotta get my marker up. So that drop right there, it was the loss that I just showed you. Now, the thing is that those with this stop loss amount of 300 pips, you'll see that those little places happen. But the more that the trade goes against me, the larger the stop loss will be. But since my stop loss is so large at 500 pips, it's not within trading my strategy. It doesn't happen too often. So you can see from this scenario that we have this 300 pip stop loss hit. Now let's go see what happened with some of the other places that we have that we had stop losses hit on some trades. Let's see if I can find one. Okay, here's another one. I'm going to zoom in so you can see a bit better what that looks like. Okay, so this one wasn't quite as much. We still had a few trades closed out in loss. 1, 2, 3, 4. So 4 trades closed out, each for 300 pips. So that's kind of a lot if you add it up, right? But we still came out with the rest of the trades did not hit stop loss. They actually came out, and we came out with just a 50 pip gain at the end, which is not even break even. We don't even come out above, but that's, again, what that looks like, or what that whole scenario looked like is this. You see the little push down? It's a little like a little teeth or a little hill slope. And then we eventually came back and pushed up. The thing is that my stop loss is the way it is so I can give my trades more breathing room to come back into my favor. Now, we need a stop loss because we have to call it quits at some point. At some point, we have to say, all right, I've lost this battle. I need to pick up and try again. And that's when when trade starts closing out, is that yes, I do have a bleeding type of stop loss that's in place. That means that if it continues to go against me, then I keep losing out trades. But I can also set a standard percent stop loss as well. So if this becomes too dangerous, if it continues to go down against me, keep going down, 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 and these trades keep closing out in loss, then I can just set my count to close out at a certain percentage, whether that be 30% or something like that, and then retry. But with my testing and how I've done this, I've seen that eventually at the 300 pip of the 500 pip mark, that the price is able to recover within that space of pip movement. And that's why I've tested this strategy on the euro pound and on the pound CAD, because those pairs have a personality of being very rangy, and they have been for the pound CAD for the last 10 years or more, and for the euro pound it's been for the last 24 years. So in reality, what does a 500 pip stop loss look like? I'm going to show you real fast uh, over the longer term. Now with my current EA settings, or how I'm trading the strategy, this is what it looks like. So I'm running this on pretty low risk, at 37% over a course of 2010 to 2017. So that's just about 7 years, 6,000 to $17,584 profit. This is with a 90% modeling quality. No stop losses were hit in those 7 years. Now, if I did the test back in 2000 all the way to 2017, so 17 years, we would have some places that stop loss, the 500 pip stop loss was hit on some trades. Now, it was usually recovered because of the equity and because of the fundamentals of the strategy and how it works. Now, the same thing happens with the pound CAD. Now you can see here, and this will be sorry, Greg, I'll answer your questions in a second. You see the small loss here, one here, and then one here. So yes, four places that our 500 pip stop loss was hit on some trades. But because our stop loss was so wide, and because we're basket trading in a particular way with a particular strategy, we're able to recover those losses every single time because I have that space. And same here. This was the largest one out of the entire group of 4, and look how well that was recovered over time. Now this is a 6K account, and it's not quite done yet, and it's moved to 121,000, over 121,000 in the course of the test. And we're now in 2016, January 2016, and it started back in 2007. I can't do the test further back than that, unfortunately. Okay, so this type of strategy, that's why I use it. I use it to my advantage. Yes, I have a stop loss. Yes, I have a percent stop loss in place as well, just in case things really get bad. But I do have that cutoff, and so to give me some leverage of working with the strategy when trades don't quite go my way. Okay, so let's get to some questions. I think we have one or two here. One second. Okay, Scott Gray, I wish you'd put shout out on Facebook for your videos. My time management is almost as bad as my risk management. Yeah, Scott Greg, I try to keep away from Facebook from doing too much trading. I've never placed anything about trading on my Facebook before. I'm not very active on Facebook, actually. Um, and trading is risky. And it doesn't matter how you look at it. There's risk involved in it. And so I'm not quite ready to announce that to the world that or to Facebook at least, that I'm a trader. And that's just not me to say, hey guys, I got a new job, and I've made this much profit. So give me, kudos or something on Facebook. I don't mind doing that kind of stuff on YouTube. But when it comes to my close friends, yeah, I'm not gonna to bother them too much with it, at least not yet. Eventually, my family I know has contacted me and some of my friends about trading, investing with me, in trading. But honestly, I'm not ready for that step yet, and I don't know if I ever will be. Because I'm not sure how much I want to get involved with friends and family's money. I don't want to, I want to try to keep that separate, um, because if something happens to happen, it could make relationships, I guess, very tricky, and uncomfortable. And so I don't want that to be the case. Like I said, there's always risk involved, and I may have losses here and losses there, every once in a while. And sometimes losses are difficult for people to handle. Um, my time and management is almost as bad as my risk management. Yeah. Uh, Risk management is the hardest thing. I think it's the hardest thing in trading, uh, because there are so many types, there's so many ways to do it. There's endless types of money management, and there's so many books and information on the forums about this is the right money management, that's the right money management, and honestly, none of them are can be considered right or wrong for that matter. It's just how people decide to use them. And how they use that material. Is it in relationship to another strategy? So, for example, if you have a risk management and you're running it on your current strategy and it's not working, well, that same risk management may work with another strategy, uh, or methodology. And so that's the thing, is that's why I'm saying that every risk management out there could be considered good or bad depending on what strategy and how you use it. Um, so that's that's what I have to say about risk management, and money management as well. Because, but what you should understand, one thing that you should take from this is that those risk management possibilities are endless, and you need to open your mind to be more accepting of something that you initially may think that doesn't work, is not going to work because the numbers are against it. A 50 pip take profit and a 500 pip stop loss. Okay, on paper that doesn't look great. That means that you have to win 10 times in order to make up for a loss if it happens. But the thing is I just showed you how I changed that initial uh, those initial numbers to work them into my favor. And I just showed you how to do that by basket trading, and allowing me to give myself more time, so that 500 pip stop loss isn't hit very often. And if it is, I'm able to recover it by trading in my strategy or using this methodology, with my particular risk management. So that's how you should look at things. You need to open your mind and be more accepting of the possibilities of things that can and it can work. I always look at trading that anything can work. This includes not just risk management. I'm talking about strategies as well. But you need to have an open mind of why it could potentially work and why maybe it won't. And the only way to really find that out is to actually test it. And I don't mean 1 to 2 months, maybe even 3 months of testing. I mean like 6 months to a year. A good bracket of time is 3 months. If you're able to profit with a strategy for 3 months, that's usually a pretty good sign that things may continue. It's still pretty short. I think that's the minimum amount of time to really gauge uh, if a strategy is working. Now, the biggest thing you should do is try to find a way to test the strategy longer term. Now, you've seen how I've done that, and it's not very hard. All you have to do is load up one of the free EAs on your MetaTrader. Let me see if I can find one. I think there's like a MACD something. Yeah, MACD sample. And what you do is you can change the settings. MACD period, I'm just gonna change it to 1,000. So basically no trades will enter. At least I don't think that they will. And then you start the strategy. Okay, I guess some trades are still entering. Wonderful. So I'm gonna use something that doesn't quite work. I think I just have you can even use like a MyFX book EA as well. I think that's what if I have it. Okay, we'll find an EA that doesn't basically put any trades in, or you can find something that does that. And right now, this is what I do. And so you slow it down, and you can test long periods of time, just like that. You can see what the price does. You can pause it. You can mark it if you have like a pin like me, like I use this Epic pin. There are expensive ways of doing this. You can buy a tester that allows you to calculate all the profit. That's not necessary. You can kind of just do that with a calculator or with a pen and paper, and you can mark where your entries are going to be. Now, the thing is that I want people to do, and this will help you profit so much. So listen up on this part, okay? This is so important to profiting in the market, and I can't tell you why. I can tell you why, but I can't. But I can't tell you how important it is. All right. So please excuse my talking today. So how do you do this? By playing the the tester, you can watch the price and watch how it behaves. And right now I'm on the 30-minute time frame. Okay. And look, what I want you to be looking at is when do these types of events happen? So these swing levels. Watch the swing levels. Look at the price. What happens at these swing levels? Why did price move at them? Look at the number. See what you can tell so much by these swing levels and what happens on the price. So when is the next swing level going to happen? So what I'm looking for. Okay. So what I'm looking for is price to. We're looking at the current price, and I paused it. So what's a pretty important level, right? It's up here. So when price gets up there to that level, which happens to be 98.5 or close to it, let's watch price to see what it actually does up there. Okay. So what we saw is when it hit this level, we saw that near that level there was a hammer candle. So there is some resistance up here or close to it that gave this candle that type of behavior. Now let's continue to see how it goes. Okay. So what happened? Okay, so when it came back down and pushed back up to that same level again. Now what's interesting about what just happened is that we had an inside candle set up here, right? So this is a good indication or a confirmation that this level up here, there could be a bounce back down because price slowed down by giving us the inside candle setup, showing us that price is not continuing to break new highs at that point, and that we already know, for one, that there is support as the resistance up here. Two, so we need some kind of confirmation. Now, inside candle is just one way to see that, but there are so many different setups. I just use the inside candle and an engulfing type of candle pattern, but there are a lot of other ones. So, for example, some people might trade this one as a kind of a type of hammer candle by looking at the wicks. You could also look at the wick of the previous candle. You see that there was a pretty large wick on the previous candle. Well, there's one here, so that indicates a slowing push on the upside. Yes, it is making new highs, but the steam of that push is slowing down, giving us the price a larger potential to push down from that point. And so yeah, the inside candle here, yeah, it did push back up, but even if you would have entered after this candle, that would have still been a good entry. Yes, it went a little higher up, but if you're looking for a stop loss, you could put the stop loss near up here or something like that. So it gives you a little bit of room, although I don't agree with the stop loss up there. That's what a lot of traders could do. And then the inside candle set up and then push back down. Okay, so that's what you should be watching, is how price behaves at those levels, or just why it's making these swing levels. Look at the candlesticks. What are the candlesticks doing? Are they giving you inside candle setups? Are they bullish? What do the candles look like in general? Are there lots of wicks at these levels? And those are the kind of hints that you need to see how price is reacting, how it's moving, the speed, the volatility of that. You don't need an indicator showing you that. You could just watch that yourself and just by doing the strategy tester on your own. So let's continue to play this out and see where price is going. So the levels that we should be looking for in this test, again, are the same levels, bottom and top of the swing levels. And so we're going to play this out and see what happens at those levels again. So sorry for the no talking period, but as we're waiting, sometimes that can happen. All right, so looks like the pair is just trying to maybe push back down to that level at 96. Okay, so what happened here? So you need to talk this through with yourself. Okay, so we had the push up. It broke our level. But the thing is that this is just in one candle, so there's probably a news event that happened during that time. So what happens next? Well, we don't. A lot of people would actually enter a long position or buy when this level is broken. That's one way to trade, but we don't know how long it's going to go after that. That's not my particular style. So let's see what happens at this point. So if we scroll back a little bit and we mark, I'm not sure if it will help us because I'm not sure if, how far back the level will go. Okay, so previously there wasn't really much action at this level where the price is. There was a small bounce on that place, but there wasn't much. So what we have to do is that we've made new highs at this point. And so how do we approach that? This time we have to look at the candlesticks to see what they're doing. Is the price slowing? Are we getting wicks on the candles? How big are they? How many in the row? So let's play that out. Okay, here we go. Here is a very good hint. Big push up, a new high, a bullish engulfing. This is a very key, very good A+ setup for me at least, where we have the low of the candle is lower than the open of the previous candle. The low of the candle is lower than the entire candle itself, the previous candle itself. And at this point, we see the push up has stopped because it did make a new high, but it was immediately thrown back down after that, showing that that this is a good indication for people to get out of the market, or a good place for people to get out of the market. Now, why did that happen? Well, not only do we have the candle setup, but we're also looking at the whole number. Now, the whole number I've talked about, and I've talked about this quite a bit. Whole numbers are important because they are places where traders enter and exit the market. A lot of times that's just the way they like to do their books. They're looking for whole numbers for entries and exits, take profit, stop losses, re-entries, all that kind of stuff is at these levels. And it's not always the case, but in a lot of the time, I won't say the majority, but a lot of the time these levels have some importance to them, and it's good to be watching them for that. Now we can't just trade whole numbers by themselves because that's not good enough. We need some kind of confirmation of multiple confirmations in order to enter a trade. You can see that this the price did hit that level pretty much right on it, so this is a pretty good example. And then we had this candle. Now let's see what happens after. Since I paused it right when the candle started, let's see what happens if the price continues to fall from there, or does it continue to rise? What's the significance of this candle and this level? Is it good enough to drop from here? I don't know. I guess we'll find out. So let's continue. Okay, so I'm going to stop it right there. So right now, this candle showed that there could be a pretty substantial volatile move back down. That didn't happen, right? Because then the mini candles after that kind of did this small range in the market. But let's look at these candles a little bit. In particular, this one. You see that it pushed back up, hit that level up at the top, so near the whole number again, and then it made a flag or a wick, right? and then it pushed back down from there. So what is that indicating to us? That means if we took a trade here, and this is happening, this is still a good sign. It's not, yeah, unfortunately, it didn't move right down, but this is still a good sign because it's showing that this level up here, that this resistance up here is at least holding for now, and it's fairly strong. Now it's not strong enough yet to push to push the pair down, but we'll continue to play this out. Okay, so it's still acting pretty slow. Remember, these are 30-minute candles. I don't know what's going to happen here. I literally don't know if this level is going to hold, but we're going to mark it if it doesn't, and we're going to show you how things play out. Okay, so I'm going to pause it again, and we'll talk about it further. Okay, so it's still moving in this same kind of small range market where it's bouncing up and down at this level. And the longer I usually see this happening, that when you see this bouncing up and down, it means that it could shoot down, or it could also shoot up. It means that there's an insecure market. People are unsure, but right now this level, right, as far as we know, this level is holding. Okay, so again, wick candles. There, here, here. And this candle in particular, this bearish one, that is another good indication for a push down. So that's another confirmation to me of that we could see some more downward movement, which would be great because if we're in this position already and we're looking for any hints that for us to continue to hold on to this trade, that candle is a good example. So let's see what happens. So we're going to look for 50 pips here on this particular trade. I have a feeling that if it does push, that it will push pretty hard at some point. Push down, I mean. Okay, that's probably 50 pips by now on this pair. Yep. Okay, so 50 pips was actually hit. So our entry was here. And where is the little arrow down? So our entry was here. And our exit was right in here. Okay, so that's how this type of movement will work, is that, yeah, this may be a good entry point, but it could still go up against us. But when we have double, triple confirmation for how we're reading price, and this is no indicators. We don't need any indicators to trade. And I'm showing you that right here. But the thing is that people think, oh, I don't need any indicators to trade. I can just feel how the market is going. No, you can't feel how the market is going. You have to have some kind of reasoning behind that feeling of why the market's doing what it's doing. And that's what I'm explaining to you here, is that I'm watching how this level and how price is reacting to this level by looking at the candles, which give me some indication of why I should continue to hold on to it. And you can see that I think that this is an inside candle set up right here as well, showing us that the market could potentially move down. When I see that happening, I set up here, and another one here, all at the same level. That's pretty good indication that this is going to continue to move down. I don't know how far it's going to continue to move from that point, but you get my point now. That this is what I look for, and this is what this is how I read the price. Now, my EA basically does a large portion of this. It would take this position. Well, actually, it wouldn't take this position, but it would take this one. It only enters on inside candle setups. Eventually, I want to do it on taking setups that have engulfing candles, which I believe I could do. And what that looks like is that an EA that's taking that kind of those kinds of trades, being used with a basket money management. Sorry, that's my FX book in the background making those sounds. Basket trading, you can see that this is how the equity imbalance curve works out. Okay, So that's pretty much what I wanted to talk to you guys about today. We're at the hour mark, um, and I'll write down a lesson plan for Monday, so we can better organize what we want to talk about. If you guys have any suggestions on what I should talk about or what you would want me to talk about, please post it here before in the next couple of minutes of the stream. I'll be able to read it, or you can post it on my on Forex Factory. Now, for those of you guys that are traders or that were part of my uh, um, uh, that were subscribers for YouTube, you guys should go head over to Forex Factory and check out my Company Be Good journal. You can see my stats there. You can read all that information. You can also watch my videos there as well. I'll put the link in the video here so you can check that out. Let's see. Here we go. Okay, so yeah, that's the Forex Factory link that you can check out. It's in the live chat on YouTube. And if you have any questions, please feel free to post it here. I like answering questions during the stream, if the even if they're skeptical questions as well. I don't mind trying to answer those on top of that. All right, so sometimes I'll post my profitable trades and how things are going. Um, and then I'll also post the today's video in the next few minutes here as well, so you can watch the stream. Please make sure to give me a positive like, guys, because it always helps and gives me encouragement to continue these streams. I'm here to try to help you be a profitable trader, and I'm telling you pretty much everything that I'm doing. I'm hoping that it's making sense. The more that you watch my streams, the more it will. And I hope that you can profit with me. If you have any questions, please let me know. All right, guys, thanks for watching, and I'll see you next Monday.